For more, let's bring in Matt Miskin, co-chief investment strategist at Manulife, John Hancock Investments. Matt, it's great to have you on. I know earnings are going to kick off and really get underway in earnest tomorrow when some of the big banks begin to report. Why is that the thing that matters here the most?
Because at the end of the day, multiples are stretched. There is a lot of actually froth in the market in our view, but the lone driver of markets from here is going to be earnings. And we're about to go into the most wonderful time of the year, and it's earnings season, because we can turn off, we can have our noise canceling headphones on, and we could just focus on facts versus feelings. We can focus on numbers and be objective here. And what we're seeing is the best earnings revisions have been in the technology sector and financials, which is kind of an odd combo, frankly, but they're almost symbiotic, meaning they actually benefit from each other. Financials are likely benefiting from the huge rise in equities, the technology sector driving stocks here, and the technology profits are helping financial sector profits. And so in our view, technology is of the best places to be. We do think that we might need to take a breather here after such a great run, but pound for pound, it's the best earnings growth in the world today.
Okay. I'm looking at your notes here, and you say we've highlighted that this is likely one of the most politically influenced markets in history, and that this past week showed it is far from changing yet. So what should investors not be doing in this environment?
So the easy thing to do, Morgan, is to get sucked into it and to try to day trade headlines and potential policy moves. And we've seen time and time again, if you're trying to time policy developments like this, you can get on the wrong side of it, and you're focusing likely on the wrong things. Again, this is why we talk about earnings being so crucial, because back in the day, in the 90s, when I was growing up, there was this old saying, it's the economy, stupid. And we don't like to use those words around here in the Miskin household, so we don't say stupid, but in our view, it's actually earnings, whatever you may say it is, that are really driving stocks. And so for politically, we would remove the noise, focus on the economy, and in being an equity investor, the next couple weeks, and even tomorrow morning, we're waking up with huge bank earnings. That's really what we've got to watch here, because the political developments could get you whipsawed so easily. The earnings trends have been the best indicator of relative performance this year. We think it's going to continue to be the case.
If you've got a higher bar to beat with earnings, since investors are getting so optimistic going into this reporting season, I mean, is that a risk in of itself?
So it has come up some, Morgan. That's a good point. So it's up to about 8%, but relative to the last 2 quarters, they were doing about 13% earnings growth. So they could actually, this is a lower bar than where it ended the last couple quarters. And so at 8%, that's what the street's looking for. We think they can do better than that. But yeah, into next year, this is where it gets hard. So technology earnings growth into 2026 is already penciled in at 20%. That's going to be hard to reach. And the overall S&P 500 earnings growth into next year is about 14%. So we've got to get it done here. So far, earnings have delivered every single time. It has been a year of earnings coming in and doing their job. In our view, the earnings bar is not too bad here in Q3. We think it's manageable, and the markets actually are trying to sniff that out even on a day like today.
U.S. versus the rest of the world, especially as we do have this conversation about earnings season.
Yeah, so we're looking around the world for the best earnings. We're investing in companies, not countries. If you take the outside of the rest of the world marketplace, European earnings are growing at about 1% year over year. The stocks are up 30% in U.S. dollar terms. Their earnings are up 1%. China's earnings are up about 0 on a year over year basis. The S&P 500 earnings are growing at about 10 to 11%. So when I look around the world, the best earnings in the world is in the United States. And if that's going to be the long-term driver of stock market returns, that's where we're going to spend the most attention. That's where we're going to look for the best opportunities in global equities.